Ever heard the saying, don't put all your eggs in one basket? Well, history is brimming with tales that caution against investing all our efforts and resources into a single pursuit. Just like a beautifully crafted garment is woven from threads of varied colors and textures, a hybrid mutual fund, such as a Multi Asset Allocation Fund or MAAF, blends different assets to forge a robust and adaptable investment strategy. Hi, my name is Varun Duggirala, and welcome to Finance Flashback, brought to you by ICICI Prudential Mutual Fund. In this podcast, we'll dive deep into the timelessness of finance, journeying through history to uncover valuable insights that can enhance our financial planning in the present. In today's episode, we'll explore how we can draw lessons from the past to chart a more prosperous financial future. And one investment avenue we'll explore is the Multi Asset Allocation Fund, or as we like to call it, MAAF. So let's dive in. In essence, think of MAAF as your special savings jar, but with a twist. Instead of dumping all your money into one place, MAAF spreads it across different asset classes such as equity, debt, commodity, etc. So, if one asset class isn't performing, the other classes step in, so that your jar can keep growing steadily. It's like having a bunch of backup plans built right in. A smart way to keep your investment game strong and balanced. Perhaps these historic stories might shed some more light on this. Let's journey back to the ancient trade routes of the Silk Road. Stretching over a millennium, with its origins dating back to the Han dynasty of China around the 2nd century BCE. This historic pathway connected the Western world with the Middle East and Asia, facilitating the exchange of goods, ideas, and cultures. The Silk Road wasn't merely a route for silk. It was a bustling network where spices, precious metals, ceramics, and other commodities traveled across continents. Merchants of that era understood the power of diversification. Imagine yourself as one of these enterprising traders. If you pinned all your hopes on trading a single commodity, a sudden downturn in demand or a supply disruption could spell disaster. But by diversifying your goods, you created a safety net, ensuring a steady income stream despite the ups and downs of market forces. So take a cue from these ancient merchants. Just as they thrived by spreading their investments across various commodities, MAAF enables you to diversify your investments across multiple asset classes, potentially safeguarding your financial journey against uncertainties. It's a strategy as timeless as the Silk Road itself, ensuring resilience and sustained growth in an ever-evolving financial landscape. For our second story, let's journey forward in time to the Renaissance, spanning from the 14th to the 17th century, and visit the vibrant city of Florence. Here, amidst the flourishing art and culture, the Medici family rose to prominence as not just patrons of the arts, but as astute bankers and merchants. The Medicis were not just patrons of artists like Leonardo da Vinci and Michelangelo. They were also sharp bankers who understood the value of diversification. Instead of confining their financial endeavors to Florence alone, they expanded their reach across Europe. This strategic move ensured that when economic challenges befell Florence, their branches in Rome, Venice, or Geneva could step in to provide support. Much like the Medici's approach to banking, MAAF adopts a similar strategy of diversification in investments. By spreading their investments across various sectors and asset classes such as equity, debt, and additional assets like real estate or gold, these funds employ suitable investment strategies designed to respond to changing market situations. This approach helps mitigate the risks associated with over-reliance on any single area. Just as the Medicis diversified their banking operations, MAAFs adopt a comparable strategy, ensuring resilience and stability in the face of market fluctuations. Opting for MAAF provides you with the advantage of investing in multiple asset classes at once, offering a diversified portfolio tailored to navigate various market conditions. So, if you're unsure about whether to invest, MAAF offers a comprehensive approach to help you navigate the complexities of the investment landscape. Now let's journey back to the 1840s for our third story, and it's all about potatoes. Who doesn't love potatoes? Some of you might even be enjoying a hot and crispy samosa while tuning into this episode. But imagine if this beloved vegetable faced a devastating disease that caused a massive shortage. That's precisely what occurred from 1845 to 1852, resulting in the tragic event known as the Great Irish Potato Famine. Potatoes were a staple food for the Irish population. Renowned for the ease of cultivation, high caloric content, and ability to sustain families on small plots of land. However, in 1845, a destructive plant disease called potato blight swept across Ireland. The blight caused potato plants to rot in the ground, making them inedible. This catastrophic event severely impacted the food supply, as the majority of the population relied heavily on potatoes for their sustenance. The tragedy of the Great Famine was rooted in an over-reliance on a single crop. Diversifying crops could have helped combat potato blight by promoting the cultivation of other crops with different growing seasons and greater resistance to diseases. The impact of a failed crop could have been mitigated. However, implementing such a plan would have required farmers to adopt new agricultural practices and receive support to transition to alternate crops. This historical lesson holds significance in the realm of investments as well. Placing all your financial assets into a single stock or sector is akin to putting all your potatoes in one basket. Risky and potentially disastrous. MAAF, on the other hand, adopts a diversified approach by allocating assets across various sectors, providing robustness and adaptability even amidst market downturns. Now, let's fast forward to the present day, where our global landscape is more interconnected than ever before. A ripple in one corner of the world can create waves that reach far and wide. Just think, a tech boom in Silicon Valley can send markets soaring in Tokyo, while an oil crisis in the Middle East can hit our local gas station prices. Imagine it as a buffet spread. Instead of sticking solely to sushi and missing out on the savory paneer or flavorful pasta, MAAF offers a taste of everything, ensuring a well-rounded investment diet. Investors can pay heed to the immortal words of Benjamin Graham, which were, "There is a close logical connection between the concept of a safety margin and the principle of diversification." This statement may find its modern-day interpretation in asset allocation done through multi-asset allocation schemes. Market volatility may lead to panic selling or buying due to worrisome sentiments that spread fast across the markets. In such a time, when there are high chances that a notional loss may turn into an actual loss, most investors may not be equipped with the information to either enter or exit the markets. A multi-asset allocation fund might offer investors with the expertise of fund managers and their team. These professionals might be able to research and pick appropriate securities to rebalance an individual's portfolio in line with their risk appetite and goals. From the bustling markets of the Silk Road to the opulent banking halls of Renaissance Florence, history brims with tales of the power of diversification. It's a lesson learned through the ages, emphasizing the need to spread our risks to navigate life's uncertainties. In essence, multi-asset allocation funds offer a savvy investment approach that transcends mere profit-making. They prioritize steady potential long-term growth and overall risk mitigation above all else. What's remarkable about MAAF is their ability to adapt to shifting market tides, whether the economic seas are calm or turbulent. A well-diversified blend like a multi-asset allocation fund can serve as a good ally on the journey towards financial success. It's a smart and forward-thinking investment strategy designed to navigate the dynamic currents of the financial world. So, the next time you consider investing, let the wisdom of the Silk Road merchants, the resilience of those who have weathered the Irish Potato Famine, the strategic foresight of the Medici Family, and the interconnectedness of our modern world be your guiding light. Let history be your compass in navigating the ever-changing landscape of investments. That wraps up today's episode of Finance Flashback, brought to you by ICICI Prudential Mutual Fund. We hope you enjoyed our exploration of the Multi-Asset Allocation Fund. This is Varun, signing off.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.